there's not that much delta. The point I'm making that going forward rentals may firm up is also because of this reason. So that's the office story. We have seen a lot of new entrants also coming into the market. There is one specific American bank that we cannot name who has entered recently in India, and they have decided to scale up their back office. Right now they have a very small infrastructure, but they, in my opinion, would add close to 7 to 8 million square feet going forward in India. Then there is another bank that we are aware of, which has some presence, but looking for aggressive growth plans. So we think the story is intact. It's just that it's no longer the hottest segment of real estate because all developers want more cash flow situation addressed. They do not want to block money into commercial real estate because commercial takes time to build. So they're going for residential development, launching new projects, more affordable, more approachable, more quickly sellable, and therefore bringing cash in their market. So we'll come to residential segment in a while. I'll very quickly move to retail sector. We expect overall 15 million square feet, which is considerable supply, still 20% vacancy in this segment. However, it is not the relevant supply again. Retailers, unlike in 2006 and 7 and 8, when they were signing every shopping center and every high street, are no longer doing that. They are very selective and they want to be in the right location at the right shopping center or high street, which is well managed and where the numbers are working for them. So the affordability. We know that in 2009, retail sector moved from rent to revenue share format. It was a big wave in real estate industry. Not every developer was aligned to it, but they had no choice because they had built retail shopping centers and they had to accept the realities at that point of time. So really retailers and shopping center owners are working together to create revenue in the shopping center. That's real estate funds who are operating out of US, Europe, Asia, Singapore, Hong Kong, or indeed Mumbai or Delhi, they are slightly worried because some of the investment they already made did not yield returns for them, and therefore that's a big area of concern that remains. Having said that, I still believe for end user buyer, for local investor, for a high net worth individual, this is an opportunity. The affordability and attractiveness of the price in certain pocket, it may have gone up, but overall it has not. So a lot of people see that as an opportunity and therefore willing to commit. There's still a lot of developers from Mumbai and Bangalore and funds who are committing to land parcels in Hyderabad at the right locations, and therefore that's a good indication. Overall, this sector has seen new launches across the country, and the launches have gone up by 41%. And all these new launches are targeted towards customers which have an affordability factor of 3,500 to about 7,000, 6,000, because that's the fastest moving segment all over India. Dominate in the Indian real estate space. Despite the challenges, the fact that all multinational companies who are already committed are growing here, it's a clear indication that they believe in the quality of resources that you are able to attract. And that's predominantly because migrants from north and south are able to afford in the city, are able to find houses at less cost. The whole environment of multinational companies or Indian reputed companies offering job opportunities continues to be there, and therefore they will continue to grow and advance their careers in this city. And that's the single biggest attraction for any multinational company wanting to come to Hyderabad, to be able to attract talent, because local talent is not always sufficient to meet the demands. And therefore, quality of infrastructure that you have consistently demonstrated. And I come every time from Mumbai, and therefore it's a big cultural change to me personally, because every kilometer in Mumbai costs about 30 minutes, and that's the time it takes to reach from airport to high-tech city in Hyderabad. So it's just remarkable that what you have done. So therefore, it will be one of the biggest advantage that you will be able to attract here. Obviously, some of the very local specific infrastructure initiatives like metro rail and outer ring corridor, the connectivity for the IT corridor has helped boost the local economy and the commitments from multinational corporations. The supply in office space or the pressure on rentals and capital values has always kept our markets attractive. So in fact, one of the questions that you can always ask, at one point of time, there was a story that tier 2 and tier 3 cities will actually pick up momentum. The reason why it did not to the extent that we expected was because there is so much of supply here. And that's good news, because that's what corporates want. Developers may not want that, and investors may not want that, but it keeps the city attractive, and it creates jobs for the city, and therefore overall contributes to the local economy and the GDP of the country. So that will continue to remain, I think. IT will continue to contribute significantly, both in SEZ and IT park space. Residential prices, in my opinion, should go up. They're very affordable right now, but it will go up. If you look at some of the other indicators we've highlighted here, we're doing a lot of search for retailers in the city. Since we do not have shopping center in prime locations of Hyderabad, we actually now switching to buying land or leasing land and doing a build-to-suit box developments for retailers, which is a new trend that we've seen in the market. So a lot of that activity is going. Obviously, the strengths in terms of some of the sectors which are pharma and biotech has always been a strength of the city and which will continue to dominate. R&D has always been a big player in the market. Overall, I would say the investment that the government has made over the last 4 or 5 years in terms of making gas available or creating port infrastructure is, I think, over next 4 or 5 years will contribute the next growth of Andhra as a state. We did some time ago a very large acquisition of industrial land at Krishnapatnam port, and likewise many other companies are going to these strategic locations to put up their manufacturing and facilities. All those benefits that you will see will come 2-3 years from now, because they're right now under construction. And therefore the real contribution and its impact on local micro markets when the economic activity takes place, employment and residential developments come and investments goes there, all that will happen over 3 to 4 years. So I think that's my take on this. If there are any questions, we'll do it after my colleague Naveen Nandwani, who's the head of South, very senior professional, been active in the market, will take you through more specific slides on your market.